Hello everyone, my name is Michael Robillard. This is the Evolving Trader, and today we are going to present to you the art of swing trading with ThinkorSwim. I know it's been a while since I've been on here. I've been very busy working on mastering my craft. As the title says, we are the Evolving Traders. And as an evolving trader, I definitely believe that you are forever a student of the game. There's never a point where you get to where you feel like you don't need to learn more. There's always room to improve. There's always room to get better. This is your money that you're dealing with. So you want to get better and better and better at it. And that's why we are doing these videos. Once again, my name is Michael Robillard. I am the teacher that loves to teach and educate people on how to succeed in the stock market. So we do have a few things that we're going to go over here today. So without further ado, let's just go ahead and jump right into this. Here is the disclaimers. Please, if you want, take the time to pause and read through all of these. These videos are for educational purposes only. I am not telling you to buy or sell anything. Folks, do not think that you can just jump in on anything as you're watching this video. This is not a live video, right? By the time I actually post this on YouTube, what you're looking at is going to be long gone. So this is all for educational purposes only. Educational purposes only. If you are going to take the stock market seriously, you need to determine the amount of risk that you're willing to take. That means you're going to have to sit down and look at your finances and see what type of money you can live without. Because there are risks involved to the stock market. All right. Once again, like I said, if you want to take the time to pause, read throughout the disclaimers. We do have a lot to go over today, so we're just gonna jump right in on this. All right, so as you can see here, this is ThinkorSwim. This is my paper trading account right here. Trust me, folks, I don't have over $10 million in my securities, although I do believe I will get there someday, just not now. So let me just go ahead and jump to the home page here. And what we're going to do is we're going to talk about swing trading. I am a swing trader at heart. That is how I mostly trade in the stock market. Now, don't get me wrong. From time to time, if I see the opportunity to day trade, I'll day trade. If I see an opportunity to scalp, I'll scalp. Those of you that know me, you know, I've said this time and time again, with the stocks, I do investment trading, long-term trading. With options, I like to swing trade, but not just with options, but also with futures. I swing trade also now. And I like to day trade with Forex. All right, that's what I fall into. I'm not saying that you got to do this. It's the best strategy for you. Is what works for me. This is what I do, and I like the groove that I'm in with that setup. Now, what is a swing trade? Depending on who you talk to, you're going to hear different things. I'm going to tell you what my definition of swing trading is. Any position that you hold between 2 days and 30 days. That is my definition of a swing trade. So if you buy on Monday and you look to sell on Tuesday, that's considered a swing trade. If you hold on the first of the month and then sell, if you go into position on the first of the month, and then you sell 30 days later, that I would still say is considered a swing trade. Now, why are swing trades so good? Why am I so excited about swing trades? There's a few reasons. Number one, You don't have to worry about the PTD rule, folks. There is no PTD rule against swing trading. PTD rule is that rule that says that unless you have $25,000, you cannot day trade more than 3 times within a 5-day week period, right? But when you're swing trading, you can ignore the PTD rule. So if you are starting off with only like $500, swing trading is wonderful. If you're starting off with $1,000, swing trading is wonderful. $5,000, $10,000. Not too many people can just jump off the bat with $25,000 in the stock market. If you can, great. But most of the people that I'm speaking to, I'm most likely positive that you're not in that ballpark. I wasn't in that ballpark, and I'm kind of still not in that ballpark. Although I do have a pretty decent brokerage account, do have a pretty decent amount of money in there. It's still not at the 25,000 yet. Not yet. So swing trading is a good way to avoid the PTD rule. Another reason why it's good, and I'm going to show you momentarily why, is because with swing trading, you get more bang for your buck. All right? Let me give you an idea here. What am I looking at here? Options. Let me just go ahead and get Dow Jones Industrial Average. Okay. So this is a 1 year, I think it's a 1 year, I don't know how, but this is a daily chart, right? So each day, each of these candlesticks represents a day out of the year, or 3 years. I don't remember how long this is. A 3-year 1-day chart. All right, so each of these candlesticks represent 1 day, right? Now let's look at these 5 candlesticks here, right? Now, if you're a day trader and you came in at the start of this run right here, which is, what are we looking at here? We're looking at Boeing, and we're looking at starting at $226 around, right? Started around $226. You would day trade this and ideally get out here, which is at 230, right? That would be considered a good day trade. But a swing trader would not just stop right there. The swing trader would say, I want to hold on to this because it's going up throughout the days, right? So a swing trader ideally would probably jump off at this candlestick here, making, let's just hypothetically say you did start off at 229. You came in as a swing trader, you came in right here, and you get out at 267 5 days later. Yeah, that is the benefit of a swing trade. You get more bang for your buck. All right, more bang for your buck. Instead of just jumping out, if the stock is still going up, why jump out? Stay there for the next day, or the day after, or the day after, as long as it's still going up, right? Same thing if you are shorting. If you came in here and you're shorting the stock, look, a swing trader would have taken advantage of this downward trend right here. Gotten out around here, probably came in on this day. What day is that according to this? This is December 12th, 2020, right? Would have probably stuck in there until around December 22nd. Could have made some pretty decent money. That's all swing trading is. Instead of jumping out on that day, you stay in there and you take advantage of the momentum of the stock for days on end. All right? And once again, because there's no PTD rule to worry about, you can do this as often as you want. You could do this as often as you want and control how much money. Now, at most, you can get a payday 4 days out of the week. And that's coming in on Monday, getting out on Tuesday, coming in on Tuesday, getting out on Wednesday, coming in on Wednesday, getting out on Thursday, coming in on Thursday, getting out on Friday, right? Or if you want, you can say, all right, go in on Monday, come out on Friday. Make it a weekly thing. It's all up to you as a swing trader. How long the momentum is going your way and how much money you want to make. You have more control. The other thing I like about swing trading is that you don't have to rush as much. See, as a day trader, there are certain indicators you have to look for, and you have to make a decision real quick if you're going to jump in or out. Same thing is if you are scalping. Scalping, you have to make a split second decision to jump in and jump out, right? There's very little room for errors with scalping, and there's a little bit more wiggle room with day trading, but still, the wiggle room is not that much with day trading. But with scalping, you have time. Like if you see this pattern going here, and you could say, you know what? Let me look the next day and see if it's still going in the direction I want, and use that as my indicator to jump in. Right? So that's the beauty of swing trading to me, is that you have more time to research, more time to study, more time to look at the chart and carefully make an educated decision of when to jump in. All right? So now, without further ado, let's look at how I do swing trading. Okay? Now, as you can see here, this is a regular bar chart, right? First off, I don't do a daily chart when I'm swing trading, all right? I like to see a more controlled environment. So what I would like to do, and I'm going to go ahead and set it up in here. I'm going to add a time frame, daily. Four-hour daily, and I am gonna put it out to 360 days. And, okay, so now I use 4-hour charts. Why 4-hour charts? Because you need time to see who is in control of the stock or the commodity that you're looking to buy at that time. Are the buyers in control, or are the sellers in control? Right? So 4 hours generally seems to be like the right time to make that determination. Right? So now I'm gonna add just one more thing to this. Right? Now, as you can see with a candlestick, you have a better idea of who's in control, right? You can see here that the buyers have been in control for a little bit, and then the sellers came here, right? But there's a way that you can make this even better. Because notice it's still kind of erratic as far as the red and the green. Now, look at this right here. Let's say you're looking at this chart, and then you come across this. This is scary, right? You're like, okay, everything's looking good. The buyers are in control. Buyers in control. Oh my gosh, look at this right here. I need to sell. But then look at what keeps happening. This is a false candlestick. Yes, the sellers took control at that moment, but the overall swing of this particular stock was still in the buyer's control. The buyers were still in control of this, right? Now let's say you look at this day right here, right? 4 hours looking good, and then the next 4 hours, oh my gosh, the sellers are in control, time to jump ship. And then look what happens here. It's still going up, right? So by looking at this regular candlesticks, these regular candlestick charts, you don't get a perfect view of who is really in control. So what I like to do is I like to switch it up a bit. So I'm gonna go here and jump into the appearance, and I'm going to change my chart from a candlestick chart to a HighKanashii chart. HighKanashii charts are pretty much, will give you the same information as candlesticks because it is based off of candlesticks. But HighKanashii charts give you a better idea of who is in control and makes it a more fluid decision-making process, as you will see in a minute here. Do that. All right, and you will see how it changes the chart a bit. Go ahead and hit apply. Okay, now what do you see? Now you see more of a clear pattern. More of a very clear pattern of who is in control, more consistent. It doesn't do so much fake outs. You still get a little bit of fake outs, but not as much. It's much more clearer. Now you see a whole bunch of greens going up, whole bunch of reds going down in a more smoother pattern to determine who is in control. This is a more clear picture of whether the buyers are in control or the sellers are in control. Now, of course, you know, you see this is my pattern here. I got the whole moving average, the 2-hole moving average with the cloud, and I also have the RSI and the MACD down at the bottom, right? So when I'm making a decision for swing trades, what I'm looking for, number one, is who is in control using this HighKanashii candlestick chart, right? And just like a regular candlestick chart, and like I've said before, you want to come in here where the red cloud is going away and the green cloud comes in. This is where you want to make your decision, right? But now I have a little extra information to go off of, right? Yeah, the green cloud is good, but everything here is still red, right? So now what I'm gonna do is I'm gonna wait till I see everything's going green and going up. Now I can say, okay, let me jump in. Now when the market opens on this day here, look at what's happening in the after hours. I could say, okay, as soon as the market opens, I'm gonna buy. And I'm gonna come in here and I'm gonna be jumping up here. And look at this. Look at the profit that you'll be making if you jump in as soon as the market opens, based on looking at the HighKanashii candle and the cloud working together. I know that coming in here is a good idea as soon as the market opens. Look at that, around 175 is this particular day, and look at where you would end out. 188. You'd make a good amount of money, especially if you're dealing with options on this, right? So this is how I make my trading decisions. Now let me try to look at another stock here. Swing trading. Once again, you know, if I'm using options and I'm buying puts, taking advantage of the candle, taking advantage of the cloud and the HighKanashii showing me, look at this. This would be a beautiful two-day trade right here. Bought right here, starts tanking, starts tanking 4 hours later, tanking, you know, and I could choose to stay in, choose to just keep following the tanking down, you know, probably jump out here because it's still going down, but you can see the green, which is indication that it is fighting to go back up, right? There is so many things that I could do, and then I could be patient, just patient. And look at this, right here, during the after hours, the candle is switching over to green. You know, I could have been looking at this and saying, you know what? Okay, switching over to green. HighKanashii is telling me it's going up. Bam! Look at the money that you could be making. I hope you see the value in what I'm showing you here. Because I'm going to tell you right now, there are people out there that are charging hundreds and thousands of dollars for what I just showed you here. On a swing trading, the beauty of swing trading. As you can see, you make more bang for your buck. You know, coming in on this day here, getting out on this day here, all right? Or let's say you were brave enough to say, you know what, I think it's gonna, I think the support is showing it's around here, I'm gonna keep it here. And then look, wow, look at that. This is how I trade every single day, folks. This is what I look for when I'm trading. Every single day, I am using the HighKanashii. I'm using all of these. Oh, and by the way, for those of you that are wondering, how do I have these, you know, how do I have this cloud and these arrows going up and down? How do I get this set up? If you're using ThinkorSwim and you would love to know how to set this up, just go back and look at my other video, Introduction to a Basic and Effective Technical Analysis Setup. It will show you exactly how I set this up here, especially if you're using ThinkorSwim. If you're not using ThinkorSwim, you're gonna have to play around and figure out how to find these on your own. If you're a broker, if your broker's platform even have them, I don't know. But if you're using ThinkorSwim, you can copy exactly what you are seeing here by following my videos. All right, and once again, I'm not charging you. No strings attached. My goal, my desire is to see you succeed as a trader. That is it. I don't need your money. I'm making my own money. And I want to see you make your own money. Just that simple. So folks, that's pretty much it. You know, this is my secret for swing trading, making big bucks. Once again, like I said, no system is 100%. You know, this is not always going to work. So you have to use this along with very hardcore risk management. All right? And what I mean by that is when you jump into a stock, when you jump into a position, you have to have an idea of how much money you're willing to risk each time. I keep things simple. Some people like to use percentages. I use straight numbers, right? So right now, when I'm trading about $1,000 to $2,000 depending on what I'm looking at, right? So at this point in my career as a trader, I have a set number of $100 to $150, depending on what the commodity is I'm trading. I do not want to see the stock go any lower. I rather jump out, wait, see it going back up and jump back in. I'd rather do that than to watch my money keep going down and down and down and down. All right? That is called risk management. Right? You have that set limit of how much money you're willing to lose, and you do not budge from that, no matter what the stock market is telling you, no matter what your emotions are telling you to do. You stick with that limit. And I'm telling you, folks, this is something that you should do no matter what type of trading style you're doing, whether it's day trading, scalping, investment trading, position trading, and swing trading. You always want to say, okay, I do not want to see my money get so low, and then jump out. Now, if you think that particular stock is good, wait till you see it going up. I had to do the same. I had to do this with Tesla. You know, I was in Tesla when it was in the 900s, but once it dropped to the 800s, I jumped out, and I'm glad I did, because this past week it went down to 500. Right now, that doesn't mean that I'm never going to go back into Tesla. Now I'm going to watch Tesla and see if it's heading back up. And if it is, then I'm going to jump back in again. Right? That is management. That is risk management, folks. I cannot stress the importance of risk management. Well, I'm about to jump off my soapbox. That's all I want to show you, y'all folks. If you have any questions, feel free to contact me. Feel free to reply to the video. I do my best to keep track of my emails. Sometimes it's a while before I get to them, but I will answer you. Another way that you can learn more and have more communication with me is if you join us on Facebook, MeWe or Wimkin. We are on all three of those platforms. Evolving Traders. Just come on in and answer questions. Folks, don't be shy. Don't be shy to ask me questions. People call me almost all the time. I get a phone call at least 5 or 6 times a week from people just wanting to talk about stocks. I get text messages on a daily basis. I get emails on a regular basis. Folks, I will answer your questions. That is my email address, evolvingtrader@gmail.com. I will answer your questions. If you can't find me, then join one of my groups. Join the Facebook group. Send me a message. Send me an IM on Messenger. I will reply to you. I will answer your questions. Like I said, my goal is to see you succeed. Now, folks, if you found any value in what I just shared with you, please spread the word. Spread the word. I'm sure you know of other people that are sick and tired of struggling financially. People that are sick and tired of being sick and tired. Folks, that is what this is all about, is to help people have hope for their financial future. That is all I'm doing here, is giving hope for financial futures. Once again, my name is Michael Robillard. This is the Evolving Trader. I hope you learned. Definitely hit that like button. Definitely hit the alerts button, because we are going to be coming up with new videos. In 2 weeks from now, I will be doing an introduction to options trading video. And then after that, at some point, maybe a month after, I am going to do an introduction to futures. All right? And we're going to be coming out with more videos to help you. And if you have questions on things that you want to know and you want me to do a video on, let me know. I will do a video on it for you. I will sit down, I will do my research, I will do my homework, make sure I come to you with the right information and give you what you need to succeed as a trader in the stock market. Anyone can win. Anyone can win. Once again, Michael Robillard, Evolving Trader. I hope you all have a great day.